Okay, gang, let's do another signal review. Pretty active session today. So let's see what we saw on the dashboard and let's walk through an example. So lots of signals generating today. Again, these are letting you know that conditions for a playbook opportunity is present. Your next action is to go through and find a way that you can fight for price, that you can enter and manage risk towards the destination. And so out of these, the ones that were really interesting to me, there was a prior value test in Bitcoin that I looked for, but it did not meet the criteria. I passed. There's a directional open drive in NASDAQ, got that one. And I want to look at this composite reversal here in the queue. So we're going to go back and take a look at this trade and kind of walk through and like what's the idea, what's the rationale around that. So let's clear the deck here a little bit and make this a little bit easier to understand. So let's get rid of some of this stuff here. So these are ranges from CPI and from the tariff announcement from the Supreme Court. This range here is last night we had earnings from NVIDIA. So this is effectively the post earnings range. So I was watching that earlier to see where we are. Where we're coming in here, though, is a spot where we have actually finished the initial balance. So the initial balance is complete. And I want to pay attention to a couple kind of key references here. So first, you can see the 5D right here. This is the most traded price of the last 5 sessions. So this is the mode of the auction, the composite auction. This is value. It's also a composite reference. And so we have a playbook trade, and that is a composite reference reversal. And it could be a 5-day, it could be a monthly VWAP, weekly VWAP. But the idea is that we're going to see this price, we test off of it, and then move. And then what does that mean? It means I'm looking for excursion towards some other reference. So in this case specifically, let's look at some other things. So at this point, we had done 457 points out of the IB. We've been averaging 287. So, one of the things we always ask, is this a wide IB? Is this a narrow IB? Right? This is a wide IB, significantly wide. Let's look at the range seen relative to the expected range. So expecting 360 points, we're at 556. So we've exhausted the expected range on a wide initial balance when we hit a composite reference. All that says is what? The probability that we can go lower is not great. Now, can we go lower? We absolutely can. But let's look also at the profile in the day, right? So far, where's value? Value's way here. Look how thin the auction is so far. What's the translation on that is that likely what has to happen is we have to find a spot like here. And we have to spend more time here to try to pull value lower so that we can migrate and accept these prices. It's the general idea that if value can't follow price, price goes back to value. So right now, we've got disconnect between price and value. So we're either going to find a spot that we can do some more business around, or we run the risk of going all the way back up, right? It can happen. So let's talk about speccing out the rest of this trade. So the idea is that we've tested a composite reference and we interact with it. Any decision level that you use, you're always looking to say, well, okay, that's an area that I'm expecting a reaction from the market. Do we get that reaction? Sometimes we cut through them and we don't get the reaction. But in this case, do we get the reaction? So I'm viewing the fact that we tested outside of the initial balance and back above it, and from that 5-day as yes, we're reacting here, likely going to spend some time in this lower area at least. And then if I layer on some dynamic references, I can see that I've got month-to-date VWAP and weekly VWAP are right up here. So these are some decent magnets that are very easily within range that become an opportunity for me. So if I was building this as a position, long position, I'd say, okay, so what we're gonna do is we're gonna look to be here. We're gonna defend against any further excursion outside the initial balance. So what should not happen? We should not go back outside the initial balance. We should hold the 5-day and we should trade up to at least get back to this composite VWAP. All right, so that's the genesis of the idea. So let's go ahead and add our 3 contracts here and see how this progresses. Okay, so let's just talk through this, and we'll use a 1-minute advance on a 3-minute bar, and just talk through how this is progressing. We're going to get down here to a smaller time frame. So that second period after we had created a little bit of buying excess, that's what we're entering on. You know, that's where our stop loss is. We are looking for, as I talked about, we're looking for us to get back up here. That's the genesis of the idea. Here's a little micro balance range. So we're progressing. If we can push a little bit higher. Okay, so now what I'm going to do is I'm going to pull the stop up because, and why pull the stop up here? Okay, or right here. Because it's possible that we could easily, we already identified this as a node for more balance. I want this to be a pretty quick, when you do the composite reference reversal, it should be a pretty fast reactive or responsive trade. And so it should go and get there pretty quick. And then, you know, as we fail up here, then come back in this direction. So that's where we're being a little bit more aggressive there. And that's it. That's the trade right there. And you can notice, like, even on this 3 minute, there's a reaction right off of this composite reference. So it's, you know, in this case, it's kind of composite to composite. But the idea is, in all of this, is that you've identified a composite reference to the auction that you believe there will be a reaction to, or responsive action. That responsive activity towards a likely destination. And the auction moves from value to value. Some of those value references are static. Some of them are dynamic. In this case, it's going back to a prior dynamic reference and just testing that. So it gives us a window where we can have an asymmetric risk reward, higher probability, as long as we see, yes, they did react off of that price. So then we now have something to defend, and we can carry it on towards the end of it. So that is our composite reference reversal, and we'll be back with more playbook examples as often as we can. And while we're doing those, you know, the idea is, hey, these are playbook ideas. Start with our playbook while you're trying to figure out yours. So if you come in each day and you're like, you know, I have ideas of direction, but I don't really have a trade. Let's help you get a trade. Let's help you figure out what that trade is. Start with our playbook and then use that as an anchor to help you develop your own. And we'll get you further down the field. All right. Cheers.